Let me start with a simple question. How many times have you looked at the Dubai property market and thought to yourself, if I had just bought pre-pandemic in the right projects such as Dubai Hills Estate or Emirates Hills, I could have made generational wealth for my family. Maybe it was a villa that seemed too far out at the time. Maybe it was an apartment by the water that felt a little too expensive. Or maybe you convinced yourself that it is better to wait and see. Let's fast forward to today and check the prices again. And suddenly, that one moment of hesitation looks like it cost you years of wealth growth. Almost every investor I meet has a moment like this in their story. Some people keep repeating it, and others decide that they're not going to miss the next cycle of growth. Hi, I'm Lina Nizar from XR. Welcome to Series 1 of Dubai Unlocked. Part 1. Do you want to uncover what top investors use to stay ahead of the curve? Because not all properties in Dubai are created equal, and going into Dubai's real estate without a strategy is like playing chess blindfolded. I'm going to share in this video the exact framework I guide top investors through. It what helps them to see past the noise and recognize which opportunities truly rise in value. We'll break down the bigger Dubai story, the government agendas shaping the future, the shifts happening across the waterfronts and suburban communities, and the 6 filters are used for every decision. So by the end of it, you will know exactly how to evaluate any project in Dubai. Dubai is one of the rarest cities in the world where real wealth is still being built through real estate. But here's the truth. Dubai real estate is a complex market. Sure, there's excitement, but there's also risk. Recently, I've witnessed buyers having difficulties figuring out how to go about their investments, which area suits what investment strategy, and all other hidden factors they should consider before making an informed investment. In turn, this leads to stress and missed opportunities as a result of their analysis paralysis. Then there are also some existing investors who have unfortunately made uninformed, hasty decisions and have not been able to get the desired or optimal outcome from their investments they were expecting or hoping for. Let's start with the bigger picture. If you don't understand the macro story, you will get distracted by short-term trends. Dubai isn't just glittering skylines. It's a city engineered for growth. And you've already felt that in how easy it is to operate here, how safe it is, and the lifestyle it offers. What I want to show you today is the data behind that feeling, because buying here isn't just an investment move. It's aligning with the city claiming to be number 1 place to live and work for in the world. The UAE ranks amongst the safest country worldwide, and Dubai ranks number 1 in the MENA region and 51 globally by the IMF for the ease of doing business from 177 countries. It's no surprise that over 80% recent buyers are international investors entering Dubai for the first time. To invest in Dubai, a single article will not suffice. You need a solid understanding of the Dubai economic agenda and the Vision 2040 urban master plan. That means speaking to someone who actually follows the market daily, understand the government's milestone, and stay updated on the initiative being rolled out. Only then do you really understand the pace of the city, where it's heading, how the market moves, and whether Dubai aligns with your investment goal. Vision 2040 has one clear objective: to make Dubai the number 1 city to live in the world. But how, you may ask? This goal is backed by 2 major blueprints already in motion: the Dubai 2040 Urban Master Plan and the D33 Economic Agenda, both multi-billion-dollar program shaping the city's next chapter. Some key highlights within the blueprint are Dubai's population to double to 8 million by 2040, a 400% expansion of the city's waterfront, hospitality footprint of more than 136%. More than half the city will live within a 20-minute drive of major transport hubs, creating true city within a city living, and a commitment to becoming a carbon zero city by 2050. And the impact is already visible. Since this vision was announced on 21st March 2021, Dubai has jumped to number 8 in the Global Poverty Index, becoming the first city in the Middle East and North Africa to break into the top 10, surpassing giants such as Miami, Chicago, Los Angeles, Hong Kong, Barcelona, and Madrid. Index measures 5 key metrics: economic strength, job creation, lifestyle, quality of living, and the cost of owning property. So when Dubai enters the top 10, it tells you one thing: global investors are taking this city very serious. Because with Vision 2040, the goal of becoming number 1 city in the world isn't a dream, it's clearly a timeline. In line with Vision 2040, Dubai's growth is being built around 5 urban centers, each with a distinct purpose. 3 are already established and 2 are still taking shape. Up north, in Dera and Bur Dubai, the city is reviving the historic district, turning them into cultural and heritage hubs while keeping the soul of old Dubai alive. Downtown and Business Bay remains the financial and commercial powerhouses, the co-engine of the city. Along the waterfront, Dubai Marina and JBR continues to evolve as Dubai's main leisure and tourism destination. In the south, the Expo 2020 site is turning into a global hub for logistics, innovation, and world-class exhibition. And then you have the Dubai Silicon Oasis, which is expanding as a major center for technology and education. By channeling growth into these 5 zones, the city ensures balanced development, stronger investment opportunity, and a more connected future. The entire goal is to create cities within a city and move towards a true 20-minute model where everything you need is close by. Understanding the 5 zones should be one of your key metrics and the single most important decision you will make when investing in Dubai. Because strategy and the point of entry matters even more than the location itself. To set your investment goals properly, you need a basic understanding of the city, the demographics, and the trajectory where the city is headed. Once you know that, everything starts to make sense. Smart investors always watch where the government is directing its focus because that's where the real returns show up. And here's the biggest clue. The moment a new growth zone is announced, major developers jump in immediately. They know exactly the next wave is forming and they launch their strongest projects in the high potential areas. Now, once you've identified where you're investing, the next step is your budget. And this is where most people slip. You need to ask yourself one simple question: how much money can I invest and comfortably lock in for the next 4 to 5 years without stretching myself? Here's something a lot of new investors don't realize across Dubai. When you compare similar communities and similar league of developers, areas have appreciated almost equally. The reason I'm telling you this is because most first-time buyers make the same mistake. They get attached to a specific project or a specific area before actually analyzing their budget and cash flow. Before we even talk about locations, I always bring my clients back to their fundamentals. Why are you investing? Is it for capital growth? Is it rental income? Is it something long-term for your family? Everyone has a different reason, and your reason dictates your strategy. Then there is your budget. Not just the down payment you can make today, but what you can realistically support over the next 4 to 5 years. And finally, your timeline. Can you keep your investment long enough for the area to mature? Because Dubai rewards 5 to 7 years thinkers, not people looking for quick flips. Remember, real estate is a marathon, not a sprint. Now let's get into the data, because this is where things really start making sense. In the last 6 to 7 years, investors who bought off plan in strong master communities saw extraordinary appreciation. Across everything I've analyzed, the gestation period is about 7 to 10 year cycle. That's when the area matures, the schools open, the hospitals open, the transits connect, and the full value kicks in. Let me show you exactly what I mean with real examples from clients I've personally guided across Dubai, from prime downtown to focused suburban communities emblazoned on the map that I've helped over the years. A client bought in downtown in 2017 for 3.6 million dirhams. Today, it's worth 6.4 million dirhams, a 97% appreciation. Another client bought multiple one bedrooms in MR Beachfront in 2018 for 1.8 million dirhams. It's now trading at 3.6 million dirhams, a full 100% appreciation. Another investor bought in Blue Waters, a one bedroom in 2017 for 3.6 million dirhams. And today, none of them transact less than 5.2 million dirhams. Again, around 127% appreciation. So if you see prime areas has appreciated 97 to 127%. Now, let's look at the suburbs. A villa bought in Dubai Hills Estate in 2018 at 6.4 million dirhams is now valued at 14 million dirhams, 127% appreciation. And another client, a pilot, bought in MR South next to Al Maktoum Airport in 2018 for 1.2 million. Today, that property is worth 3 million dirhams, again 127% appreciation. The suburbs perform just as well as the prime areas, and the question is always how. They followed the same 6-point framework that I'm about to share with you. And if you apply this framework to your investment, you can also receive similar results. Number 1, invest in concept, formative stages in master plan communities, not just buildings. They entered large-scale unique developments at the formative stage. If someone tried to rebuild downtown today, or Dubai Hills Estate, an 18-hole golf championship, these are not easy to replicate. It would take 20 years or more. Early entry gives you 20 years head start, zero competition, and you ride the wave of all the infrastructure growth. Number 2, choose a developer with a legacy. They only invested with developers who already proved they can give appreciating products and delivered on time. MR built downtown, Nahil built the Palm, Omniat, the Dorchester Lana, 23rd out of 860 ultra-luxury hotels in the world. A strong legacy protects your long-term value. Number 3, enter the right price per square feet. Are you early or late for the party? Your entry point determines your upside. Buying into Palm Jumeirah today at 5,500 or 12,000 dirhams per square foot is completely different from entering years ago at 1,200 dirhams per square feet. Your goal is to find the next Palm at the ground floor pricing before the market wakes up. Number 4 is avoid the hype. Be careful with projects that rely on celebrity tie-ins or luxury brand collaboration. A project doesn't need a fashion label. It needs a developer who knows how to maintain a building and deliver long-term value for residents. Number 5, be wary of easy payment plan. Easy payment plans like 30/60 attract speculative buyers who flip early, flood the market and crash prices. Developers like MR intentionally use an 80-20 payment plan to filter out the short-term buyers and ensures the community is filled with stable, long-term investors. And finally, align with the Vision 2040 growth zone. Follow the government's long-term plan where the metro is going, where the new hospitals, schools, and job hubs are emerging. These zones appreciate first because the city itself is pulling the growth. A simple reason all of this works. People who enter early in a new master community when the concept is still a formative stage get the lowest price per square foot. Developers reward concept stage buyers because they're the ones who believe in the vision first and are priced at 30% lower than ready properties. Your main goal should be capital retention and buying at ground floor pricing. So even if there is a price correction, your capital is protected. And with every new launch, prices increase by 5% at least, which means early investors watch their value grow before the rest of the market catches on. When the metro arrives, when the mall opens, when the school and hospital comes in, prices follow. This is exactly how wealth is built in Dubai. You enter early, you let the city do the heavy lifting, and you ride the appreciation. Now, here's the bottom line. Every successful real estate investment starts with clarity, whether it's a long-term, short-term, or end use. You need to know your budget before you commit to an area. You need to understand how long you can lock in the funds, and you need a strategy that matches your financial capacity. In Dubai, it's not about how many properties you buy. It's about making smart, sustainable moves. And a big part of this is choosing a developer whose payment plan and product fits your goal. If you can't take on an aggressive payment plan of a tier 1 developer like MR, you can also look at a second-tier developer such as Imtiaz. The key is choosing what fits you. Once your fundamentals are clear, your budget, your goals, your cash flow, the next golden rule is location. What lifestyle are you aiming for? Do you want a waterfront investment? Do you want a golf community? Are you looking at the future city of Dubai, the south, an area that's coming up fast? Or do you prefer being closer to mature, established parts of the city? Some investors are very bullish on MR South because it sits right in the path of the future growth. Others prefer downtown or Old Dubai because they want to be near communities that are already fully established. As I said earlier, both can perform equally well as long as the developer and community quality are solid. And you might be thinking, look, this all sounds great, but which project should I actually choose? Let me make it simple with a few clear examples. If you've missed on MR Beachfront, shift your focus to Dubai Maritime City projects by Beyond Omnia. This is a premium waterfront district with marina living, incredible views, and serious capital appreciation. If you feel like you've missed downtown, then look at Dubai Creek Harbour, Downtown 2.0. It's a modern waterfront community. It mirrors downtown lifestyle, and it's still at a stage where the upside is significant. And if you're researching for the next Emirates Hill, the next ultra luxury signature address, that opportunity today is Oasis by MR. It's exclusive, it's a low density, and has the potential to deliver the kind of long-term returns Emirates Hills gave its early buyers. At the end of the day, choosing the right investment comes down to aligning your budget and your goal with areas that offer both present value and future potential. The key is to see the opportunities before the rest of the market catches on. And remember this, your investment is only as strong as the people behind it. A well-established developer is the bedrock for every successful investment. You're not just buying a unit, you're buying into their track record for delivering quality and their reputation. Have they delivered on time? Are their communities thriving years later? Your developer is your partner in this journey, so choose wisely. So how do you actually narrow down the right developer? A strong developer is easy to spot. They have real market credibility, not just because of how many projects they've launched, but because of how many investors keep coming back to them. Repeat buyers tells you everything. It means investors got solid returns for the first time and trusted the developer enough to reinvest. That kind of consistency doesn't happen by accident. And here's why it matters. When a developer has proven track record, demand follows. Their launches sell out faster. Their communities stay strong. And that kind of buyer confidence directly protects your investment and pushes long-term appreciation. Another key point, financially strong developers stay steady during economic downturns. They don't cancel projects, they don't delay construction. They have the capital to keep going even when the market gets choppy. And that gives you peace of mind and that your project will be delivered exactly as promised. The best developers also strike a balance between their commercial goals and the interest of their investors. They understand that long-term success is built on trust, transparency, and delivering consistent value. A great developer doesn't just grow your investment, they help you thrive. Now, let's talk about the factors that help so many of my clients double their investment in under 5 years. Timing. Are you entering at the right moment or are you late for the party? I always tell my clients the right project at the right time is everything. When a new master community is launched, developers intentionally leave a margin for early investors to benefit from. That's why the first few releases always creates the strongest return. And the proof is everything. You've already seen the data. Being proactive, being early, being strategic is what keeps you ahead of the market. Uniqueness matters too. When a developer brings something truly new to the market, the upside becomes even stronger. A great example is Oasis by Amar. When it was launched, the entry price was 8.5 million dirhams. The investors who moved quickly and locked in those early units will see the highest value gain because that price point will never return in the community. Fast forward today, Q4 2025, launches are ranging from 15 million for a 4-bedroom to a 28 million dirhams for a 6-bedroom. Now, if everything you've heard so far feels like a lot, don't worry. By the end of this video, you'll have a clear framework to make confident investment decision. Let's recap quickly. Step 1, define your investment goals. Step 2, set your budget and understand your cash flow. Step 3, choose the right location and the right developer. Step 4, enter the right project at the right time. Now let's move to the next big part. And this one is a complete game changer. Miss this and you're leaving serious money on the table. You need to focus on premium real estate. And that comes down to 3 things. Number 1, prioritize the most sought after units in the master community. When a new cluster launches, always look for premium plots. The park-facing houses, water, golf community units near the entry and exit larger plots, or the best views. These are limited. And when something is limited, it appreciates faster. To put that into perspective, if 2 units have a 400,000 dirham price difference in launch, the gap often widens to 700,000 dirhams or even 800,000 dirhams as the area matures. And in Dubai, where buying power is strong, end users don't compromise. They pay for quality. Look at Golf Place in Dubai Hills, a 5-bedroom, 7,600 square feet villa bought at 8.3 million dirhams, sold for 16.5 million dirhams. Another 5-bedroom on an 8,400 square foot plot bought at 9.3 million dirham is now worth about 25 million dirhams. The difference between the golf-facing and the non-golf-facing unit is now 10 to 12 million dirhams. This is why premium units always win in the long run. Number 2, choose premium or established developers in multi-developer areas. When you enter a new district like Dubai Islands, Dubai Maritime City, Palm Jebel Ali, or emerging south of Dubai, many developers are rushed to launch. But the best returns comes from the premium names. For example, Dubai Island, stick with Beyond, the Omniat Group. Or Dubai Maritime City, look at MR or Omniat. JVC, Ellington. Dubai South, MR, Miras, or Expo City, depending on the sub-districts. Choosing a premium developer with a higher down payment places you amongst financially stronger buyers, and that directly protects your investment. And if a top-tier developer is out of your budget, a solid second-tier developer is still a smart move. The goal is to remain safe and stress-free while your asset grows. Number 3, invest in communities with healthy buyers. People always ask me why I prefer a more aggressive payment plan. The answer is simple. They attract financially stable buyers, and that creates a long, resilient community. Here's what that does for you. Healthy buyers hold longer, which means less panic selling and strong price stability. For example, you've given a gold coin to a billionaire and a beggar. The beggar will sell it for the smallest gain. But the billionaire, in this example, the deep-pocketed buyers, would hold on to this during downturns. That capital retention is your main goal when looking at an investment metrics in Dubai. Lower resale supply drives up demand, and when demand rises, prices follow. Over time, the community builds a reputation of exclusivity, and that attracts premium end users, people willing to pay more. This is exactly why the investors who achieve 70% or 100% or even 300% gains were all from communities with healthy, long-term buyers. Now, here's the final mindset shift. Invest in real estate like a visionary, not a day trader. Dubai is not the market for flipping unless you land a rare one-off opportunity. Real estate is a long-term asset. Think of it like planting a tree. You don't expect the fruits next morning. You plant it, you water it, and over time, it rewards you. Give your investment at least 5 to 10 years. That's when you start seeing real sustainable growth. Selling too early not only adds stress, it means that you're missing the biggest gain. Let your property work for you. Be patient. This is how you win in Dubai's market. And finally, choose the right broker, someone who can actually has you back from the start to finish. A good broker is a consultant that has deep knowledge of the metrics of the market. They set the right expectation, guide you through every step of the process, and help you identify opportunities you might have missed. When you have a proactive broker besides you, you stay ahead of the market instead of chasing it. Think of your broker and developer as your partner in this entire journey. Someone who makes sure your investment is smooth, strategic, and genuinely rewarding. And now that you have all the insights and data, you're ready to make an informed and confident move. Just remember, not all properties are created equal. The right investment should align with your lifestyle, your long-term plans, and your financial goals. The power to make a smart, impactful decision is in your hands. If you're ready to take the next step, my contact details are right below. Let's connect and move your investment goals to the next level. And if you found this helpful, don't forget to like, share, and subscribe for more market insights and exclusive opportunities. Until next time, with another game-changing investment breakthrough, I'm Lina from XR signing off.